Hello everybody, and welcome back to 5 Minute Crypto, the channel where we cover the most important crypto news in just 5 minutes, back again with another breaking crypto news episode without ads. Here's why Coinbase keeps going down during Bitcoin rallies. It is basically the unpredictability of the Bitcoin price. It's quite logical, but they've also said that makes it so it's really hard to prepare for traffic spikes since you really don't know what you should expect. Crypto exchange Coinbase suffered outages, like a freaking ton of them, almost every single day, and the increase in user traffic and trading activity results in a massive extra load on servers. Trading platforms are having a hard time preparing for such spikes due to Bitcoin's unpredictability, experts said. You know, one thing I gotta give to them, and that is that they really get back on their feet quite quickly afterwards. But if you take a look at the daily volume on Coinbase, you can see quite drastically here the change that they're noticing, So let's say on average, the volume is about, how much? Let's say $1 billion a day. And all of a sudden it went to $10 billion a day after having a couple of spikes towards 3. If you're having 3 times the usual load, I can understand how it's very hard to prepare for it, right? Now, even though this is most likely going to be taking up their IPO and getting their value quite a lot higher and just putting in a lot more money from that perspective, Larry Sermrick is also saying, you really can't ask much more than the growth that Coinbase is experiencing right before the IPO at this point. At this point, I'm expecting the stock to trade at more than $100 billion this year. The moment is there and the mania will happen, in my opinion. Also think of the second order effects of the Coinbase stock trading at crazy valuations. There is still not much retail that hasn't entered so far, and some surely got washed yesterday, but I'm fairly sure that the IPO will attract a lot of normies to the entire asset class. Because just look at how much it's grown over the last couple of weeks. This is definitely looking quite insane. Then, Ethereum whales holding 10,000 plus Ethereum increases by 4.2% in just 2 weeks. It's actually pretty crazy, because if you just look at how much 10,000 Ethereum is, and you understand how many of them there are, let's quickly type it in here. 10, 1, 2, 3. That is, a nice $10.7 million right there, where a couple of years ago, this was just so ridiculously cheap. I sometimes want to... You want to do bad things to yourself if you start to think about that. The same thing goes for a little bit earlier this year, when Ethereum was just... Let's quickly check it out here. Just $100. Oh, this is definitely hurting, but all right, it's the game. It's the crypto game that we play, and it's also the fun part about it. The fact that we're still early for the bigger picture, and that also makes me think about the fact that $10,000 for Ethereum is also not that crazy, really. You start to think about the bigger picture in that. Then, this is not November 2017, says Mike Novogratz on Bitcoin's price gyrations. It basically refers to the fact that Bitcoin right now has much more institutional adoption and quite a lot more back into it, where a drop of that same kind of severity for that many years, at the end of the bull run basically, is really not as likely anymore, because there's a lot more institutional investment rather than retail, and thus it is most likely going to be better sustained. At least that's what I personally think, and that's what a lot of guys have been saying. Also, the fact that the regulations are coming on in a positive sense, could be a very positive thing. And then Goldman Sachs says Bitcoin is on the path to maturity. Analyst Jeff Curry believes more institutional money is needed to stabilize the market, and it is coming. The key to creating some type of stability in the market is to see an increase in participation of institutional investors, and right now, they're small. Roughly 1% of it is institutional money. I don't agree with that, as I do think quite a lot of the big guys are in here already, even though they might have not really publicly made it out there, or they might have only gone in with a little amount of money. But I think the 1% here is really misplaced. I think it's actually quite a lot higher. Because if you just think about how much, for example, Grayscale is putting in MicroStrategy and stuff like that, if you just calculate those things up, I don't know the website anymore for it, you notice that I think it's at least 3%, but whatever. Whatever, we'll see. In a couple of years, the game is looking so freaking different. This was it for 5 Minute Crypto. Hopefully just 4 minutes here, because I'm trying to do these things a little bit more quickly than usual.